and I thought we'd zoom in on the commodity space today in the wake of the coup in Guinea. The West African states' borders are shuttered, its future uncertain after its president was ousted in a military coup. Now, the upheaval is already being felt beyond the streets of the capital, where the mineral-rich nation, being the world's #2 bauxite miner, which I had no idea. The immediate impact of Sunday's coup saw aluminium prices up by 3% to 10-year highs. The share price of alumina went up yesterday as well. Rio Tinto is a 45% stakeholder in alumina in Halco Mining, the biggest bauxite operation in the state. And Rio's part-owned iron ore mine could be impacted to the likely advantage of competitors such as BHP and Vale. Simandou's nickname, which is Pilbara Killer, pretty much sums up its global significance to the West Australian iron ore major. So lots of angles here to anticipate. So I thought we'd take a look at Rio and what that increase in the bauxite price is going to do to some miners here. Gaurav, how do you think Rio will be affected by this?
This is a boon for Rio, actually. The aluminium business has transformed out of sight over the last probably 6, 7, 8 years or so. It used to be the case that aluminium, for those who don't know, it starts off as bauxite, which is kind of just simple rock mining, and it gets turned into alumina, which is a white powder, and that gets turned into aluminium, which of course is the metals. So there's 3 distinct stages, and in the past, all 3 of those stages were integrated into a single businesses, and they were dominated by state-owned companies. So China, Saudi Arabia, and Russia were the 3 big miners, and you also had Rio Tinto as well, which sort of was the largest independent. And all those integrated supply chains meant that there was a very tight relationship between the price of bauxite, the price of alumina, and the price of aluminium. The industry has developed now to kind of separate those 3 commodities out into their own little price cycle. So there's now an independent bauxite market, an independent alumina market, and an independent aluminium market. And all those 3 are quite distinct and quite counterintuitively. The most attractive part of that entire value chain is not the aluminium, where all the processing and energy goes. It's actually in the very basic rock mining. Bauxite's probably the most attractive part of that business, and Rio Tinto is very good at it. The fact that Guinea is now potentially offline is wonderful news for Rio Tinto. And I'd also single out alumina. I think alumina is going to do well. The share price has reacted already. We own shares in alumina, and I think it's probably still too cheap, because that price is going to feed straight through to their bottom line, and it's going to also impact alumina prices, the commodity prices as well. So it's a very big deal in the industry. Unequivocally a positive for existing producers. And it will feed right through bauxite and alumina prices as well. And you've seen the share market react. It just goes to show that, you know, the size of your operation is one thing, but the security and the safety of it is quite another. And every time you have an operation in Guinea, you're always going to struggle, I think, with the security side of things. It does put a question mark also over this new iron ore project, this Simandou project. It looks like that was a near certainty to be developed. I wonder if the proponents are now going to go back and look at the risk premium on it, or whether the licenses are going to change hands again. It just increases the uncertainty a little bit. So good for the big guys, not so good for Guinea.
Okay, all right. So you think alumina is still too cheap and worth buying?
I think alumina,
what about Rio's stock price? How's it?
Yeah, look, it's a bit more complicated for Rio Tinto, because they are overwhelmingly an iron ore producer, and the iron ore price is tanking. So that largely offsets any benefit they might have. They have operations in that country as well, so it's a lot more problematic for Rio Tinto. I'd say on a net basis, it's probably not much of a positive for them. I wouldn't be buying Rio Tinto or expecting the price to jump on the basis of this. But certainly the competitors will be doing much better. BHP to some extent, although they're not huge in this industry, but certainly Alumina and to a lesser extent South 32 is probably the way to go.
Okay, Gary.
Yeah, I mean, Gaurav's covered most pretty well there, but obviously like I think Guinea ships out 25% of the global bauxite market, so it is pretty significant. Positive for the aluminium price, which is great for Rio in that regard. Just obviously negative in terms of the project there, but again, that's in the iron ore, which is negative. I just looked at the chart actually. I noticed that in 2019, 2020. That 105, 106 level, that was kind of the ceiling for the stock. And then once it actually broke above that, then it was sort of, got up to 136 there. So I think actually that 105 zone, that's kind of where it's bounced from just recently there. That's a really key level for the stock. So breaking below 105 is probably going to be pretty negative there. It has definitely been a bit of selling in Rio just because of the iron ore, the fall away in the iron ore price. So yeah, it's a big level here around that 105. I think a weekly close below 105 is probably quite negative. So that's just a big level for the stock. But it's a bit of a zero sum, really. I think you've got the plus there from the price here in aluminium, which I think 17% of their revenue for Rio. I think 9% of the EBITDA. But this project's in question now. But I guess that's a shared project with the group there. It's funny. It's the whole thing. I actually found out about this. Because I'm a Liverpool supporter, that Naby Keita, who's one of the players there, he's actually been caught in Guinea. That was the first I heard of this story. Was actually following a football player. Yeah. So it's funny how the world works.